Good morning, friends. Welcome to the SBI Securities Daily Market Podcast, where we discuss levels on Nifty, Bank Nifty, USDINR, along with the positioning of FIIs with respect to the open interest data. Now, yesterday it was one more day of consolidation, and we saw all the major indices trading in a tight range. Uh, at the end, Nifty and Fin Nifty ended the day 0.2% higher, while Bank Nifty ended absolutely flat for the day. If we see the global markets, US markets have ended with gains yesterday, while Asian markets are also trading positive. Uh, this is leading to a positive impact on the gift Nifty also, which is slated to open higher for the day, 60-70 points. Last few sessions, if we see Nifty, it has been holding 19,250 on the downside, 19,450 on the upside is acting as a resistance. So it's been a range bound move from an indices perspective. But if we see the open interest data in terms of options build up, then highest open interest is visible in 19,300 puts as well as 19,400 and 19,500 calls. So this makes for the next 2 days, including today and tomorrow, 19,260 on the downside a very important support, and 19,450 on the upside. This could act as an important resistance. Now, why 19,450? Because this is the zone where the 20-day exponential moving area is the 20-day EMA is placed, and this area needs to be crossed for any reversal pattern to materialize. So above 19,450, if this is crossed, index could witness an expansion of the trading range on the upside up to 19,530. So for Nifty, 19,260, 19,280 zones will act as an important support. 19,450 first resistance for the day. Above 19,450, a move up to 19,520, 19,530 likely. Coming to Bank Nifty, this index opened stronger yesterday, but there was minor profit booking from higher levels, and it closed exactly at the 20-day exponential moving average and closed flat virtually for the second consecutive day. So here for this index, 44,250, 44,300 is now developing as an important support, because there is a lot of put writing visible in 44,400 and 44,500 strikes. On the other end, the call writing is visible in 44,500 as well as 44,600 strikes, which means that the resistance on the upside is now shifting to 44,650, 44,700 levels. Now now if we see these levels of 44,700, even on the last Thursday, where there was expiry and indices opened positive and we witnessed a selling pressure from higher levels, 44,700 proved to be a resistance throughout for the entire day. So for now, for the day today, if we see indices sustaining above 44,700, there could be a sharp short covering bounce up to 44,950, 45,050 on the upside. Now let's see what the FIIs have done in terms of their figures for the cash segment. FIIs have been net buyers now in the cash segment to the tune of 61 crores. Now this is a small number. However, looking at the context of their behavior in the last few sessions, they have been net sellers. This is a welcome number. This is a positive number. DIIs on the other hand have been net buyers to the tune of 320 crores. So that's quite normal now. When FIIs reduce their sell figures, the DIIs also reduce their buy figures. So this is part and parcel, but important to track here would be the open interest participation data of the market participants. Now FII's long short ratio for index futures have once again improved to 45% from Friday's level of 40%. This is positive. FIIs, they have now turned net buyers in terms of index futures, stock futures. They have even bought call options. So as we have been discussing for this data point, the data positioning yesterday looks a lot better than it was there in the last few sessions. So we feel that for Nifty 19,250, 19,260, and for Bank Nifty 44,250 levels would act as very important supports, and steadily the trend could turn into a positive one for the next few sessions and going into the next series also. Stock specific, if we see, or sector specific, good bullish moves were witnessed in cement, capital goods, paints, power, railways, chemical stocks. All these sectors witnessed good moves on the upside. There was some reversal pattern observed in auto space also, so watch out for auto sector stocks today. And we expect the momentum in all these sectors what we have mentioned. We expect the positive momentum to continue for the next few days in these spaces. If we speak about USD INR now, talking about that pair, what we've seen is yesterday in the US markets there were weak jobs data, which has led to some kind of weakening in the dollar index. So this dollar index has now corrected almost 1% from the recent highs of 104.47, and this has led to some appreciation in the rupee also. So we feel that USDINR would continue to trade in a range between 80 to 30 and 80 to 85 on both sides, and we feel that steadily there could be appreciation in the USDINR in case the dollar index still continues to weaken and approach 103 levels. So overall 80 to 30 on the downside and 80 to 85 on the upside remains an important level for the dollar index. That's all for today's morning podcast. We hope you enjoyed listening to the podcast and found it useful for your trading decisions. Do tune in tomorrow for more market related updates and insights. Until then, happy trading, stay safe. Thank you all for listening to the session.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.